Hello, 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 everybody. Happy Thursday, Unemployment Thursday, GDP Thursday. How is everyone doing day after Powell's disastrous press conference? Did anybody watch that? He did not have good answers. But we're in a new phase. We're in a new phase, and it's now going to take till 2027 to just get it to 2%. To 2%. And raising next year from 2.1 to 2.5, but they're a rocking success. They are. They're an amazing success. Everything's well balanced. Well, 10-year doesn't think so. 30-year doesn't think so. All right. Good morning, Sterling. Thank you for putting in the earnings. Did you put in Micron from yesterday? Because Micron missed on revenue and got hammered. Good morning, Patrick. There's not you can look at this. These were all minor things this morning. So if you want to see the chat for what Sterling puts in, thank you. Good morning, Ted. Where else do we have? We'll go through the GDP numbers in a second. Good morning, Martinez. Good morning, Jake the Snake. Good morning, John. Good morning, Eric. Good morning, Jacob. Good morning, Royal Palms. It is important to say good morning to everybody. Good morning, Richard. Who wants to type in here? If you're not typing in here, well, then you still get a good morning. I've been saying the Fed needs to go. You know, it's a clown show. It is. What's that in relation to? Didn't we know we were involved in this already? I don't know what that means. All right. So we have the GDP numbers coming out. Cutting again yesterday, another 25 basis points, pretty much because the market expected it. But he got just so cornered on some of the questions, and he talks in circles. Well, you know what? We're looking at the data, but we're looking at the longer term data. But then press conference ago, he was looking at the shorter term data. They just want to do what they want to do, and they have no good methodology. At least you had one dissenter yesterday. And Q3 GDP numbers coming in higher than prior, and higher than consensus. And even though it says final, remember, they keep revising this. This will get revised many more times. It's just not reported anymore. So these are the final numbers for Q3. Initial claims from jobless claims dropping. Remember how it came in at 242, back to 220, even below consensus. Continuing jobless claims also dropping from prior and better than consensus. Core PCEs, these are the final numbers for quarter over quarter, came in at 2.2, consensus with 2.1, but down from 2.8. The more important PCE numbers are coming out tomorrow morning with option expiration, futures expiration. So you got the quad witching tomorrow. So that's going to be the big thing that drives PCE, and then you have options expiration. And I think this is the biggest one ever. What else do we have? We have Fed Philly business conditions. This is interesting. Fed Philly prices paid still climbing. New orders dropping and prices paid climbing. Real consumer spending quarter over quarter for the final came in at 3.7, above forecast at 3.5. What else do we have going on today? We have a Kansas City Fed manufacturing and composite coming out, and then we got some auctions, and that's about it. Remember, tomorrow, don't get caught off guard. We got PCE, we got op action, we got the final numbers for consumer sentiment and inflation expectations. Okay. Yeah, they are very similar. They are very similar. So, and can we please, I hope this continuing resolution does not pass. That is a bunch of junk. Let the government shut down. Let the government shut down for a while. This is absolute crap if you've been following along with that also. If they put that through, you get rid of Johnson as speaker. If they put that through, that is absolutely atrocious. All right, so besides everything was red yesterday besides their healthcare. Today, everything green. It's by the bounce, except don't touch Micron. After earnings down 11%, miss on revenue. So that's where that sits. Your groups, everything's positive, led by consumer cyclical and column services, but it's back to buy everything after the dip. Scheduled to be a pause so far in January. Remember, that's what, 41 days away, so we'll keep track of that. Fear and greed with yesterday's price action dropping into fear. And remember, this was not a healthy market. So you finally got some selling, and this is what can happen with the mega caps. Now, this is where we've had the primary reaction. We'll know in the next couple days if yesterday was the low. I'm going to be watching because looks like we're going to get a green bounce bar. So the lowest lows of the last 2 days are going to be important if we get a pausing bar and then take that out. But we finally, the VIX, we dropped, over 3% and some stuff, but the VIX acted like it was like Armageddon was coming. That's how unstable things are. The instability index is through the roof, by the way. 37, 36, still a very expensive market, even with yesterday's sell-off. We already covered the earnings thanks to Sterling. Lennar also was a miss, by the way, and dropped. After it closes, Nike and FedEx. And then tomorrow's Carnival and Winnebago. It'll be interesting. I expect Winnebago's earnings to be a disaster. But that's where we sit. Good morning, Heinrich. Oh, no. Oh, boy. I don't care the way it looks. The stuff he's trying to blast through is a complete and atrocious nightmare, and I haven't liked him since the beginning. Yeah, it's total garbage. You know what? It is total garbage. Yeah, that's the way it works sometimes, Richard. All right, let's take a look at the S&P. So, interesting in the S&P, we broke below the rotation zone. So the little flagging pattern actually broke down. And now, yesterday's close was below the major resistance area that became support. So on a closing basis, that broke. All right. Let me just do on the March contract. So you see here on the March, now we're bouncing a bit today, but the daily has shifted to bearish mode. The weekly is still, we came right down to the bottom of the rotation zone yesterday. So this is the key area to watch. Yesterday's low is going to be the key area I'm going to be watching for the remainder of the week. Also, it's still technically in bullish mode unless we close below the rotation zone on the weekly, but this is where I am patient and I will be sort of more aggressively looking to sell rallies and more patiently looking for dips. Now, if we do get a green bar today, which it looks like we will, and then we break below today's tomorrow and then take out Wednesday's low, it will not be good for the markets. Until that, what would put me back into short-term bullish mode? I'd have to get a follow-through close on any bullish patterns above 60, 76, 75. So 6,077. That is the key area based off the secondary reaction that would put me in anything short-term bullish mode. Other than that, I'll be watching more, as I said, for rollover plays. Hey, Charles, yeah, how about that FOMC? It was LOL. So this is when we talk about, and I've talked about this, we finally got a primary reaction down. Again, if we take out yesterday's lows, it still might be a primary reaction. But the secondary, the strength of this bounce is going to tell us a lot. And the market has to really now improve itself, especially after closing below key support. So that's what that looks like. That's exactly what I'm watching. And if we do something tomorrow morning and take out today's lows and then follow through with Wednesdays, because this looks like it's going to be a pausing bar, 58.72 and 58.38 would be the next key levels. Beyond that, if you look at here, let's change the color. I'm finally glad we're getting some price action that we can use for teaching. So We closed above the 62.5 yesterday. You see here spiking just below it, closing above it from the lows in November. So that's going to be key on a closing basis, but also you see here, look where that harmonics now put us, because that we could get that magnet price of 58.33. It's not there yet. So based in terms of the harmonic probabilities, we're not there because we did not close below 59.32 on the March contract. Am I looking to the 4-hour rotation zone? First thing I'm watching, yes, because we're right up against the 1-hour rotation zone. If we move through there, I'll be looking at the 4-hour, which is really close to this 37.5 harmonic bounce. There's a little 4-hour %B buy here, but I'll just, it's again, that's a bounce play only, and I'll be watching for rollover plays. If we do continue stronger, the major area I'll be watching for a rollover play is around that 50% harmonic. The minor level is around that 37.5, which lines up at the bottom of the rotation zone. Excellent question, Jake. Excellent question. The NASDAQ. The NASDAQ pretty much closing right at very major support yesterday and closing right at the 50% harmonic after coming back right down to 62.5 and bouncing. So where does that put us? On the little bounce, let me do this. The NASDAQ's not technically in bear mode yet on the daily. It's still in neutral mode. For it to get back into bullish, it has to regain 22,023. Now, based off of this, the key thing is pretty much yesterday's low. If it closes below that, just remember 21,300. Then we get the magnet price back down to 20,866. But this is neutral mode, which means it's roughly balanced for me looking for buys and sells, because also it's still in bullish mode. We returned only to the top of the rotation zone. So it's still in bullish mode, but it's not aggressive bullish mode. It's equal balanced bullish mode because of the daily. And any buy setups on the NASDAQ have to follow through, and we have to get closing above 2032. Other than that, I will still be watching for potential rollover since we're in a more balanced market now in neutral mode on the daily. Hope that makes sense. So from this standpoint, to readdress Jake, you see here 4-hour rotation zone. 21,771 would be the first key area I'd be watching on a continued rally. And then it'd be closer to, I'd watch in this one closer to that 50%, 21,880. Not yet to the top of the rotation zone, especially going tomorrow with OPEX, with the PCE numbers coming out, with the consumer sentiment and inflation numbers related to consumer sentiment numbers coming out. We're not out of the woods yet. It's a very busy end of the week. By the way, next week I'm definitely not going to stream on Christmas, and I probably won't do a stream on Christmas Eve. I will be here Monday, though. I'll let you know on Monday, unless something completely falls apart. All right. I need a little time off today. Longest down streak in the Dow. Also the Dow, well, breaking below the 62.5, but tapping off that 87.5. So Dow is also looking for rollover plays. But again, after this massive, I think this is the longest losing streak, consecutive days, red days in the Dow. I'm not surprised to see a bounce. I'm now then going to be watching for rollover plays, and especially reconnect over the next little bit with the 200, and that's roughly the 62.5 harmonic from the lows in August. So again, the Dow's been in daily bearish mode. And also from a weekly standpoint, the Dow, we're going to have to see where this week closes, but if it closes below the rotation zone, it would be in neutral mode from a weekly standpoint. Russell, again, I didn't flip this one around yet. Closing well below key support yesterday. Closing, look at this. With yesterday's close, it took us all in the consolidation from September, October, even August. We're back in that area. So now the very key resistance is coming in right around that 37.5 harmonic. So on any bounce plays on the Russell, I'd be looking at 2,300 roughly for the first key area, and then 2335 roughly. By the way, this did trigger a double top. Now, this isn't the strongest double top because of the price action leading into it, but we could easily get a magnet price over the next few weeks back down to 2137. The VIX panic yesterday, and then look at this. Boop, boop. No panic. All done. Fear all over. I mean, it's still elevated from where it was because the markets were discounting everything, but these markets are schizophrenic. DAX finished the little double yesterday. Little finishing it and then still closing within the rotation zone, breaking below the rotation zone again today. Okay, but the DAX now, it's still technically in bull mode, but could be shifting to oops, wrong way to draw that one. It could be shifting to neutral mode. It's still in bull mode on the weekly, not even returning to a weekly rotation zone. That's how insane the DAX has been. But pay attention roughly to where it closes today, about 20,050. If it closes below that, it could be shifting to neutral mode. The DAX, in order for me to get into more bullish mode, has to get above 20,329 again on any plays. Good morning, Coco. The notes, these are the note futures. Closing below the lows and all the major closes from after the election lows. Closing, if we break down here, look at this. It's going to come into the major lows for possibly April 24. And then we also have projections down here to November of 23, potentially. Again, I'll be watching on any bounce plays in this for rollover plays. We are very oversold, so we might be getting a breather or at least a sideways correction coming up, but nothing yet. There might be some percent B buy bounces, but they'd be bounce plays only. So tomorrow morning, I'd be paying attention to today's high. On the yield basis, look at this. The yields, I'm not expecting this double to trigger, by the way. It's just a placeholder, but taking out, I talked back in November, I think, of the magnet price of 4.5 on the 10-year yield. We hit that. Still expecting now a retest of 4.6 before a potential pause. We are getting very overbought with cycles getting to the top, but weekly cycles still turning up. Remember, we pulled back 3-week pullback in the rotation zone. This last week was a percent B weekly buy, and we're following through nicely, but it's going to get into an area of very key resistance up here in the short term. Longer term, I think we could actually get up to these 4.8 over the next couple months. I updated this to the Fred numbers for the 10-2s and the 10 3-month. The 10 3-month, which is now positive, and the 10-2s still up around this level. So I've updated the double targets. Remember, this triggered a double bottom and still climbing higher. I'm really watching this because above 20 basis points on the 10-2s, it generally starts to even deteriorate more with the markets. And the 10-3s, once we get above 0, it's starting to get into area to watch out. So that's just for a point of clarification. Dollar index. Remember, we had the double, which completed yesterday. Now, this is also something with that strong move yesterday. I'd be looking to hang on to something continuing. You know, you still acknowledge the final targets, but this would be one because the next minor harmonic projection is at the 62.5. And if we can follow through, and this is on again a longer term basis, if we can follow through with a close above that 62.5, this could just keep riding. So, crude Still holding. Yesterday, EIA numbers came out, a little sell with the EIA numbers, but still there's an underlying bid in here. I'm really paying attention to the 69 level though. If that breaks, then I'll be watching for the return to that 60, 66, 70 to 67. But I'm watching to see if this breaks out higher. There is an interesting bid there. Gold, again, I don't know if there's anybody who actively trades gold here, but that closing print was absolute BS, that settlement print yesterday. You can see it here. This was actually where it was trading right at close, right around this 2600, and the settlement print was at, what a joke, at 2653. Oh boy. But remember, we could still see some downward pressure on gold into the beginning of January, and then we might start ripping higher again. Rich says dollar index will hit the 22 high. It might. There's not much to talk about. Might be watching for a short-term bounce playing copper, especially if we set up a percent B buy. The yen, we're finally, again, weakening also the yen now, closing above the post-election high area. Remember, this is yen intervention territory, but this magnet price is still 159.15. Okay, we had the nice little pullback. Weekly percent B buy. And we've had, because we closed above the 62.5, and this didn't pull back, did not validate that. We still have the magnet price of 159.15. Euro, again, little bounce here, but I'm going to be watching for rollover plays continuing in the euro. Look at this. Look at this also. We got the RSP, which is the equal weight S&P 500. This, as of yesterday, even closed below the major support from the end of October. And this has been having waning momentum, stair-stepping higher and breaking multiple key support levels. So this shows the breadth that's the problem. So even on this bounce, if we get the Mag 7 kicking back in, though it's not being followed. It was already, look at all the red bars on the equal weight ETF for the S&P 500 going into yesterday. This is what I was talking about. I should have brought this up earlier. I did, but I didn't show the chart of this is why there was not a lot of participation. The breadth stunk. If you compare that to the spiders were moving sideways and then had the sell-off yesterday. The RSP was already weakening well into that before the sell-off yesterday. Now, the spiders also ticking off that 87.5. So now we'll redo these other levels later. Same thing. Any bounce play, the spiders are definitely, I don't know if that crossed yet. It doesn't look like it, but it's at least in neutral. No, it's still in neutral mode. I'm in bearish mode on the future, so I give this the benefit of the doubt, go in bearish mode on this. Again, you can use your 4-hour rotation zone on this, but the key levels on the bounces, I'd be looking at 590, 458, then 597, 48, just based off the harmonics. Closing right at very key support. The Qs still closing technically above key support, just barely. No, I want this line. So on the Qs, watch for, again, about 524.06 and 527.08. The Qs are in technically neutral mode also, whereas the futures were not yet. And here's your equal weight NASDAQ. Closing actually below very key support and right by the lows from the 15th. So this one also I'll be watching for more rollover plays in. Bitcoin, back to the bottom of the rotation zone, rotating back up, still holding key support. Tesla, watching now. This is going to be very key on this secondary reaction too. So that's why I'm using these little harmonics, and there's 1 bar harmonics. 465.47 is key, and today, if it keeps rallying, 457.75 area. What else do we want? Would I share which internals? I do use the tick and the tick. I know use the tick, and I watch for, again, depending on the level of the day I'm setting up. I use the tick more than the tick Q. Also, I'll glance at the tick Q occasionally if I'm more focused on the NASDAQ, but I look at the tick more so. And I'm looking for, all right, what is these, let's say the tick's pulling back. How are we getting to key support levels, or are we holding above them? Because then when the tick bounces, okay, that's where I'll start looking at other stuff. So like in the tick right now, pretty moderate opening. So now I'm going to be watching to see on this tick pullback, I'm going to be watching to see how much weakness comes in, because that's going to tell me a lot. And then I also watch, especially when we make higher highs, let's say intraday higher highs, but the tick does not. For intraday stuff, I can look to raise stops. There's a number of ways I use that. We haven't talked about Intel in a while. If you look at the monthly chart, it's major support. It is at very key support. And this is, let's get to the monthly chart here. You do have a monthly double bottom. And this is what you're looking at, the prior major support level. So from Intel, in order for me to get on to follow through with anything on a monthly time frame, or you can look at it on the weekly. I have to fix that. There's your weekly. It's a double within a double on the weekly, but this still works. Any buy has to follow through above 26.43. What I'd be paying attention to, Sterling, is if this sets up for a weekly percent B buy. That's what I'd be paying attention to if we get a weekly percent B buy, because that could be a really nice front run against major support. What else? Snap. I have not looked at Snap in forever. I mean, I actually had a really nice double bottom pattern. I have not actually looked at this in forever. So, that was really nice double bottom pattern, wasn't it? So go with There isn't a lot there right now. I mean, if you're already in it, I'd be paying attention to that 11 mark in the short term. Other than that, is key at that 50% harmonic. So there aren't a lot of great patterns in there unless you're trying to trade support resistance or writing options against it. You know, I mean, your great pattern for the buy was down there, which has already been through. But right now, that's really key, holding that 11 mark. Good morning. How can you stop forcing trades? Are you trading a methodology, or are you trading, do you have a trading plan, and are you following what your setups are? Because if they're valid setups, generally when people are forcing trades, they're not trading setups, they're reacting to what the market's doing. You need to be consistent and have consistent setups. That's why I stress over and over again. I think you know some of the setups I teach on here. They're not the only setups I use, but it's not like I'm talking about different things every day. Oh, we did a MACD cross. I want to buy gold, or I want to sell gold, or I want to do this just because something else happened. Or it's either my setup or it's not. And I'm not worried about missing trades. Dude, there's always another trade. So it's sticking to your setups, sticking to your trading plan, because if your setups are either there or they're not, and if you're taking setups and they're not working, then you better reevaluate your setups. And I'm not saying all setups should work. You're going to go through losing streaks, period. It's part of trading. It's just a time when even the best setups don't work. So you then have to separate if you're taking your setups or if you're just trading. Okay, so little bounce coming into the 610 area. Let's just take a look real quick. So as long as the S&P does not get below this 59.90, that's going to be very key for me. And again, if we're looking at that 4-hour rotation zone, you're going to be, where's my rotation zone? Where's my rotation zone? It's right there. So I'm going to be watching as it reacts or potentially reacts. And just look at this price action. You have some prior support and resistance right above there. So that's where I'm looking if this keeps rallying. But right now we're trading at that nice round number, that 6,000. So I'd be looking at the short-term chart to see if we start making a potential topping pattern somewhere within here. And then this is where I'll look at the tick too. So now we're still getting that tick pullback. I want to see how well the market holds up with the tick pullback. Thank you for putting that in there, Jake. There you go. Also dark screen. Again, have a methodology and execute it day in and day out. With that, thank you everyone for tuning in. And I hope you all have a wonderful rest of your trading day. We'll see what happens tomorrow. Option expiration, PCE, consumer sentiment, inflation numbers. So do not go on Christmas break early. Well, that's what Sterling's doing. Again, thank you for tuning in, Dark Screen, and keep working at it and come in here and rely on people and ask questions if you truly want to learn. That's one of the reasons this channel exists. Okay? With that, I'll talk to everyone later. Have a wonderful day. Bye for now.